Hey guys, welcome to another analysis. And of course, I hope you're having a lovely time. I hope you're having a good day. And of course, I hope you actually wake up on the night side of the bed. All right, okay, today is Saturday, and of course, the financial market is currently asleep, but then we have the synthetic market. This gives us opportunity to trade on Saturdays and Sundays. So today being Saturday, we're looking at analysis on the synthetic market. So we'll be starting off with the volatility 75 1 seconds. After that, we move to the volatility 75, then crash 500, boom 500. We go to boom 1000, crash 1000. So that's going to be our analysis on synthetic markets for today. And of course, as you can see, we still have the pound dollar, we have the BTC and the XAUSD, which is currently on the normal market, the normal, I've forgotten the name, the normal market. So that is actually made possible by just one broker that gives access to trade both on Saturday and still trade on a normal days with normal financial market, which we all know. And of course, that broker is called Deriv, and the link will be in the description in case you want to open an account with them to enable you to trade the market on weekends, on public holidays, without any what's it called? Without any fundamental disturbing, or just use your technical. If your technical plays out well, then you're good to go in the market. That said, let's dive into our today's analysis. Okay, so this is a chart of 75 1 seconds. So these are the pattern we marked yesterday, or the zones we marked yesterday. So let's go to our 40 minutes chart to mark our daily highs and lows. Okay, I think let's move to this next one because it's actually testing it because let's if you see we can see almost the same thing here. Yeah. So I think here is better good. So they can see here is a recent low where we have, remember I said most recent. This is the most recent, and of course if this get broken, then we can think of this one. This is going to be next low, which leads to all these bullish movements. But then what do we do in between market? Are we going to go up or below? Of course, if you already know the way I trade markets currently, I said once it breaks above it, then we look for long trades. If it breaks below it, we look for short trade. But then what do we do in between the market? We wait for break of structures to see which is going to, if you want to trade, maybe you want to have what's it called, a scalping trade in between this zone. They look for break of structures. So let's go to the 15 minutes chart to wait for break of structures. So currently, as you can see, a break of structures right here, where you can see the market currently changing structures from here. You can see the market breaking this structure right here, retesting it, going above it, then moving back to the zone. Of course, poke it right here with this momentum candle and likely making a new high, which is going to be the next high right here. And of course, you can see the market getting injected in that zone, telling us that this zone is likely to be respected. But then we're having a momentum back into that previous zone. So let's see what really happened. So if this zone still gets rejected, for now, I can't really tell, but then just wait. Remember, you are not to trade what you want the market to do. You are to move along with the market. So we wait for the market to get to this zone again. If you get rejected, then we see a bullish candle closing above this zone right here. You can see a bullish candle closing above this zone. Of course, we can enter this market on the buy side. Our stop loss below this zone, and then I think profit is going to be this next zone right here. I repeat, wait for a first bullish candle to close above this zone. If that happens, then wait for you enter on the buy side with our stop loss below this zone, and of course, I think profit is going to be here, which is almost 1 to 3 weeks reward ratio. But if that doesn't happen, then wait for a break below the zone. If you last a break below the zone, wait for a retest, and if you have that, we can go short. Of course, putting our stop loss above this zone right here. So that means on the short side, a break below is the retest give us a short, and of course on the long side overall, the break above this, it will give us a long time overall. But then on the day trade, we can see a bullish candle closing above this zone. Then we can go long on these targets, and of course this is going to be our stop loss right here. So that's going to be that for the volatility 75 1 seconds. So let's go to 75 itself. Now this actually was the market yesterday, and of course it seems still we're expecting it because I can see some rejection here already. So but let's still move to marker today's zone. So let me remove this so this doesn't get deleted. And I can see this recent high is still valid, and this is our recent low. And point yesterday, this was the recent low as yesterday. As yesterday, this was where we had our recent low as yesterday. So then it gets broken, and of course, if we check the 15 minutes chart, it's got broken right here, having a test, and of course, we had a moment to the downside before this what's it called, consolidation we have right here, and of course going back to that zone again for a retest. But so do we call this a retest or do we call it a breakout? So then let's pick another one. Let's pick another rectangular market to mark our recent low, which is currently this zone right here. So what we're going to be waiting for now is, now the market, if it breaks into this, then we test it, then we can go long targeting this. Remember, on the day trade, not really swing trade, a day trade is a trade for like 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, or maximum 8 hours or 10 hours is okay on this trade. So that means if you're going long, you just target it. That's if it gets broken above here and you have a retest giving you a good bullish candle, then you can go long, and of course target here with your stop loss here. And of course, if we get this zone gets broken again, have a retest, continues, then we can go short on this market. If you're going short, our stop loss is going to be above this zone, and of course our target is minimum of 1 to 2 because this is the most recent low. So our stop loss is going to be above here, and of course the take profit is going to be minimum of 1 is to 2. Now, before we go into the crash 500, I'll be giving you just a few minutes to make sure you subscribe to this channel. If you're watching this the first time, come in and log my video, please do it to hit the subscribe button, and of course don't forget the bell icon beside it because we actually drop our alert videos. Alert are videos we drop whenever the market moves to our zone. For example, if you get to this zone, we see a retest, then we can actually drop an alert to let you know that the market goes to our zone. So please pay close attention to it, whether on the buy side or on the sell side. So those are alerts we usually do. So if you haven't subscribed, please do it to hit the subscribe button. Please, that bell icon is actually very necessary so you can get reminded because we actually did a lot of this today yesterday. For example, when the market got to this zone yesterday, we actually dropped alerts telling people that the market got to our zone. So pay close attention if you want to go short on it or you want to go long on it. So actually give analysis on the market into this zone, and of course, people that actually saw that trade. If you didn't see that, you can actually see the previous video. You can see video we made about the market getting to this zone. So that is going to be on the alert. So if the market gets to our zone, I will see likely three signals. We should drop alerts on that. That said, let's go to crash 500. Now on crash 500, we're still going to mark in our recent highs and lows. Now this is let's say the high that actually led to all this. But if I to mark a recent, this is the most recent. Now this is the current one, so we are not going to mark it because this is the current one. So this is the most recent. But the fact of we taking this is because the distance from the most current and here is almost ineligible. So even if you're saying you're targeting this place as a target, it can be your target, but you can't say if it's booked above you're going to buy to this zone. No. So that means if you're looking for a major buy trend, it's when this gets broken, then it tests this, then that's when we talk of a major swing back trend. But then if here gets broken, you can't see you're taking it long and expect it to get broken because this is a major one too on the 4-hour chart. So now what you're going to be looking for now is for a day trade is a change of structure from here to this zone. Remember on day trade for today. So look for a change of structure from where it is, which the current is the recent low, a change of structure from there above. So let's go to the 15-minute chart to see if we can see anything of structure right now. Now this being the recent low, and of course you can see the market moving up, having a lower high right here, an higher high, and of course a lower low right here. But then let's still wait for a change of structure because the market actually gives something like a minor internal structure right here. So we're going to wait for this minor internal structure right here to get broken. So you can use a minor internal structure. You can see the market likely to retest this. But remember, our going short on this market is not going to be, even if you see a good bearish candle closing right here, we are not going short on this. We're only going short on this if here gets broken, retested, and we see a good bearish candle. That's when we go short on this. Otherwise, we are going to be waiting for a change of structure of this major high right here. So if this major high here gets broken, wait for a retest, then we can go long to this level with our stop loss. Of course, it's going to be below this zone. Now remember, this zone is still valid because all here is still reacting to the same market analysis. So we are still going to be putting our stop loss below this zone. That means if the market should go above this, retesting this, and we see a good bullish candle, we are going to enter on a buy on that side, and of course our stop loss is going to be below this zone, and the take profit is going to be on this next high right here. And please let me say it as a disclaimer, this is not a financial advice. I'm not actually telling you to trade the market just the way I just said it, but all you're going to do is this is the way I'm going to be going long. I and my team, we are going to be going long on this particular market, either going long or going short. And that is why I say the alert will be dropped. So you're going to do your opening analysis based on the alert. If it works along with your own personal analysis, then fine, you can choose to take it. But if it doesn't, you can choose not to take it. I'm only telling you the way I am seeing the market and what I'll be looking at to trade for today on the synthetic market. Now remember I said this is synthetic, so this is not naturally the normal forex market you should know. So this is actually copying the exact formation of the forex market. So that means there's nothing like a synthetic, so there's nothing like fundamental. All you wait is your technical. If it works as well, they should be on the good side. But if you don't have an account with them, you can actually check in the description. I will drop their link in the description where you can open an account, and of course you can fund it as low as $5 or even lower than that. And of course, opening trade, even there's some trade actually requires less than $1. Believe me, there's some assets actually require less than $1 to open a position because their leverage is actually very high. You can have a leverage of almost 1 to 1,000, 1 to 2,000. You have the unlimited based on your package. So you can just check the link and of course you can choose the package that best suits you. Okay, that's it. Let's go to the next one, which is going to be the boom 500. Now, boom 500 is almost similar to what you just said in cash. Now, these are our recent low and the most recent high. Then what we wait for is now on the swing trade, you wait for break here and continuation to this zone. Then on the other side, a break here gives us a swing trade on the bearish side. But then what do we do within this zone? We wait for a break of recent structures. Now our recent high and here is actually this is the internal break of structure. You can see a break of this internal structure. That means this bullish candle going above this, having a test and continue. Then you can think of going long on this market, and of course, top price is going to be below this zone, and of course, we are going to target this. Now, remember, sometimes actually there can be a liquidation of the market after giving you a what's it called a retest. They see the market moving along that side to take out your stop loss. So that actually happens. So if that happens, fine, and so be it. That happens on most of the times. But I think I've been doing a video on that on how to actually avoid such traps because most times that's one of the most common traps. You see the market actually giving you bullish candle, giving you everything set up is working, then you enter the market. You see the market moving out, tapping at your stop loss, and of course later moving in your direction. That's actually very, very possible because of how the market is actually formed to work. Why? Because the bigger market and the bigger financial market hope to take your liquidation, hope to take your money to make their market more profitable. That said, that'll be on another video. You can actually understand that better in my next video where I'll be speaking on liquidation and how the market actually liquidates your finances or taking out your money and later moving your direction. So on this, on the boom 500, waiting for a break above this, testing of this, and of course we go long on this. So let's go to our 15 minutes chart to see what we have. So you see the same thing. You can see first, if you do a 10 line here, the 10 actually has already been broken with this. But let's just confirm that. Okay, let's start from here. Let me just say we are starting from here. If you're starting from here, you can see it's already been broken. So even if you want to use this, it's already been broken. So just waiting for now is the market to break above this, retesting the and go long to this one. So already we have some major internal break of structure. But then to confirm that, wait for a break above this, I can take out this current one. Remember, if you're moving this to this next area here, if you want to retest this, if you are choosing this, and of course then it can only be broken once the market goes above this, it tests this, then we can think of going long. That is a full change of internal structure. That's it. Let's go to the next one. We'll go to the boom 1000. And of course our zone we marked for like some weeks ago is currently still valid. You can see the market, we actually marked this zone for like, I think that should be a few weeks ago, and you can see the market is still moving up and down in our zone. So the same thing is still valid. For now, we are not going to trade inside this zone. We are still waiting for the market to break either above this or below this. So any of it that happens there for like almost like since at the beginning of this week, it has been moving in this zone. So we just have to wait. And for me, I don't believe in this. You buy here, you sell here, you buy, you sell here, you buy here, you sell here, you buy here. So why not just wait for the market to break up? So you know you're going long on the longer side or you're going short on the longer side. So that's that for boom 1000. So you go to the final one first. So you go to the crash 1000. So on cash 1000, actually this was the zone we actually marked out yesterday. Let me take it let's go to the 4 hour chart. This was the zone we marked yesterday. I can see it already been broken. So now that's actually, but actually I didn't take this trade because if you look at it very well, the breaking here when that happened, that was I think around at the middle of the night. I was just still on the bed when it happened. I just woke up and I saw the market was already somewhere around there when I woke up. And taking the market with my stop loss here is actually on the risky side. So I just left this market to move. Otherwise, me, I was actually short this market. I would have gone short on this. After this current one, then a retest, and of course, putting stop loss and of course the target is going to be minimum of 1 to 2, and that would have been a good trade. But unfortunately, that's how it is. We lose some to make some. So what do we look at for today? Let's go to the H1 once again. You can see no recent high right now. So it's for a pullback. So currently just for a pullback, a break below the recent low. Remember, I like to follow the most recent. I'm actually tell you, let's go to the what's it called to the daily to see the next low. We start to zoom out. Let's see, trying to zoom out and say, okay, this is the next low, so we should target that. Yeah, it's good, but for me, I prefer the most recent because most times we have pullback. So why don't you just wait the market to pull back, then taking out this recent low, you of course can go short and put your stop loss either here, or if you have another what's it called rejection, you can put your stop loss. I think it should be above this recent low right here. So that's going to be our analysis today on a synthetic market. Of course, we look at the VIX 75 1 second, VIX 75, cash 500, boom 500, we look at boom 1000, of course, look at cash 1000. That's it. That's going to be the end of analysis for today. Please don't forget, if you're watching this on YouTube and this is your first time you haven't subscribed, please hit the subscribe button and click the bell icon. And please do it to share this video with your friends and your colleagues and your co-traders so that they can take advantage of this knowledge and try to compare it with their own analysis. And please, the comment section is there. You can always drop your thoughts and what you think. And there's any other what's it called synthetic index you'd like us to look at, please do it to drop it in the comment section and I'll be looking at it together. That's it. Please do have a lovely and profitable day trade ahead.